And now for the hangover. That's right, the first thing we need to discuss is the Fed getting ready. They are preparing the markets for what's to come. The second thing is the inflation sensation. No matter where you are around the world, prices have been rising, and I've got some extreme examples for you today. And the third is the next big thing. First, we had the AMC and GME meme stocks. We had commodities. What is it right now? What is that next big thing? I'll talk about that and more. Let's go. So today we'll begin by talking about the Federal Reserve. As always, I bring you the information directly from the source. This is the Federal Reserve Bank of Atlanta. The current inflation episode, Have We Met Our Fate? Spelled F-A-I-T. We'll talk about that in a moment. This is brand new from the 12th, and what you could see here is the most important point, in my opinion. He points out, though, that this is becoming increasingly clear that the intense and widespread supply chain disruptions that have animated price pressures will not be brief. What is he saying? Why is this important? Because all along, the FOMC statement, Jerome Powell, when he's being asked questions in front of Congress or the reporters, doesn't matter, all of this official information coming out is suggesting it's all temporary and transitory. But yet you have the Fed president saying, not going to be brief. It's not transitory. And that's so important. Look at what's happening. By the way, FAIT, flexible average inflation targeting, and that essentially means we're going to overshoot by a long shot for a long period of time, but don't worry because we were really low for a long time, so it'll even out. How do you feel about that? Looking at this here, it's a few quotes that I wanted to show you, and it's talking all about the Federal Reserve, and they're talking specifically right here about the taper. The taper is, for those who aren't aware, it's reducing the amount of money that they print every month. They are not reducing their balance sheet, and they are not increasing interest rates. What they're doing is reducing the amount of money they're printing, currently $120 billion a month, and the rumors suggest it will be $105 billion a month upon their initial tapering. Look at this. I'd be comfortable starting in November. I think that the progress has been made, and the sooner we get moving on that, the better. You see that? The sooner we get moving, the better. And I don't know if I have it right here, but essentially what they're talking about is inflation's getting so hot that they need to be careful because they need to start bringing that balance sheet down before they touch the interest rates. So they got to get moving. They want substantial further progress on the job situation. And as a result of this, they can then take their actions. Okay? They're at that point right now where supposedly by many standards, they are there or around that level of substantial further progress, meaning they have the excuse to taper. Quote, as long as we have those pillars, employers have signaled to me that they're going to be looking to continue to hire to meet that demand, and that should translate ultimately into some solid growth numbers. Essentially, left, right, and center, they're all saying this. They're all saying it. Let's do the taper. Now is the time. Okay? The more policy space that we have, talking about interest rates, the better. Given that we have made that progress, I think that we should be acting robustly to create that space. This is really the time to move forward, and I'm going to really advocate with my colleagues that we do this soon. Do you understand what they're saying here? This is so key. What about this? Fed's Bullard says bond purchases should be tapered quickly in case rate hikes are needed. You haven't heard them talk like this in a very long time. Quote, I'd be advocating trying to get finished with the taper process by the end of the first quarter of next year. Saying specifically, I believe it's here or the next one, that they gotta get going so that if they wanted to, they can increase interest rates in the spring or summer. Look, Fed policymakers hone in on November taper timeline. 3 U.S. Fed policymakers on Tuesday said that the economy has healed enough for the central bank to begin to withdraw its crisis era support, cementing expectations that the Fed will start its taper next month. As soon as next month, we'll see. I believe that the substantial further progress standard has been more than been met with regard to our price stability mandate. Why he would say that, I don't know, but anyway, and has all been met with regard to an employment mandate. Look, the U3 unemployment rate is at 4.8%, if you want a little bit of ridiculousness. And then you've got this right here, just showing you the consumers' inflation expectations remain elevated for the short and medium term. This comes directly from the New York Fed website, and essentially saying that the actual consumers do believe, obviously because they go to the store and they shop and they have to fill their car with gas and everything else has become more expensive, the consumers believe that prices have risen, and that showing up in the data, in the surveys. If you want to check out the survey, there's a lot of charts and things. Check it out down below. Let me know what you think. Are the prices really transitory in their rising? Is this just a supply chain problem, or do we have issues underlying all of this? Let me know in the comments. Let's discuss this. I love to see your comments. Now let's break it down a little bit here in the Money GPS Insights. Right now, the Fed is preparing the markets for the eventual taper. Let it be known that the taper does not induce negative sentiment immediately. What it does is it readjusts people's portfolio to take less risk. On a personal note, more inflation means we need to take steps right now into action and not delay. Because if we buy something today, we can lock in that price. So think smart about this, because it is very certain right now, at least for the foreseeable future, that prices are going to rise. Even the IMF is warning right now. The IMF warns of need to be very, very vigilant over rising inflation risks. Strength of the recovery so far means it is too early to talk about stagflation. That's right. Always a little bit of fun stuff, isn't it? Steaks could soon become champagne-like luxury. This is what they're saying right now. That essentially, the price is becoming so high for different reasons. They're talking about climate and so on. But the price, no doubt, on all of these animal products has risen considerably. Look at this. They go in a little bit further, essentially talking about, the climate aspects. But I had another one in here that basically just showed you the price, okay? They have gone up to a degree we haven't really seen before. All of them. That's food prices. That's, in this case, gas prices. Gas is above $5 a gallon in New York. Okay. This is not something that's unusual for, Canada, for the UK, for other places. But in the US, to see it get to these levels is definitely quite lofty. So there's more information in here if you want to check it out. You've told me so many times, no matter where you are, I've seen reports from all over the place about prices rising, store shelves empty, and so on. Let's keep that discussion going. It is very, very important. Desperate for tires. Component shortage roils U.S. harvest. So they can't even get the tires because of the materials, because of the supply chain, because of all these problems. It is compounding the effect. Really. Out of stock items plague grocery delivery services. This is one particular one that they highlight in here, this delivery service. But what we can see here is that there's a shortage of all kinds, and we were not prepared for this to happen. It shows you the failure of the supply chain and its inability to get stuff to people. They're willing to pay the price. It's not like they weren't willing to pay it, but suddenly it's not even available. All right, this is crazy, but this is the stage that we're at. All right, and looking at this, polar plunge. Snow weather. Brits face November freeze as polar vortex collapse to send temperatures plummeting. If the temperatures plummet, what's going to happen to the price? And speaking of thumbs up, hit that thumbs up, hit that like to support the channel. I do appreciate it very much. It's right down there. Just one click does help me out. Now, this is important, not just if you're in the UK, but they are predicting that there's going to be some seriously cold temperatures in other areas as well. Okay, this is going to have an effect on the food supply and the supply chain as a whole. You could see more empty shelves in certain areas, and there also will be an impact just on the availability. But besides the point, cyclone closes one of the world's busiest ports, creating ship traffic jam. So this is in China. Tropical cyclone approaches the southern China coastline at a time in which everything needs to run so smoothly. These shutdowns are definitely going to make things worse. And here it is, another prediction. $80 oil is here, is $100 next. What do you think? What are the chances of this hitting $100? I mean, they were saying $80, not possible. And I said, as the prices were rising, look, we hit $150 before. We are having issues here. They're talking about the economy growing and so on. Certainly, things are being transported. We know that. So there is demand for oil and oil-based products. Why wouldn't 80 be obvious, right? Now, I don't make predictions specifically, but that's the direction. We can point at that direction. What do you think? $100 a barrel on the WTI? Let me know. Sharp surge in energy prices threatens economic recovery and is already slowing growth. It's important to understand that while things can move up, it needs to be done in an orderly fashion. That goes for anything. Commodities especially, because of how sensitive they can be, oil particularly. But at the same time, when it's everything and it's going up in a straight line, this creates that disorder, and there's nothing that could be done to resolve it in the short term. It's simply not going to happen. Now, you waited to the end. What is the next big thing? Well, hedge funds snap up uranium and bet on green energy shift. So this is a tiny, tiny market compared to all that ESG garbage. The ESGs, the environmentally friendly funds that are buying Amazon and Apple and Google and Facebook, whatever, all of those, maybe there's going to be a shift where the money starts to transfer over into things like uranium, considering that, they would consider it to be clean energy. This year, nuclear fuel has risen in price to its highest level since 2012. So it does get into that after years of stagnant prices, a 37% rally in prices for nuclear fuel. Uranium has helped attract investors back to the sector. They're talking about, the details of that. It's something that I think could be taken off, but we don't know exactly. You know that from the government side, there's more of a push for clean energy. And as a result of that, you're going to have literally trillions of dollars from these governments going in to whatever it is, wind, solar, maybe it's nuclear, whatever it is. We are seeing the money go in that direction. And then the hedge funds, then the investors, the retail investors, everybody follows after that. So I would say pay attention. All right, now if you're not an insider, you can do that. It's free, 5 days a week. I will email the video of the day. Check it out right here at this card or themoneygps.com. And if you haven't, hit that thumbs up button to support the channel. I do appreciate it very much. It's right down there. Click it and you can get me, support for myself. If you haven't seen this video yet, it is absolutely going berserk. It's taken off. Click it and I'll see you there.